a review of the FTSE 100 from an intermarket analysis perspective for the price action Wednesday, finishing the 12th of November 2014. Okay, so I'll try and keep these videos as brief as I can from now on, just an end of day market wrap up with regards to the FTSE. Okay, so let's get to the point. Nikkei higher overnight, Shanghai higher overnight, the Hang Seng higher overnight, so all doing pretty stellar. Okay, the FTSE 100 obviously finished negative for the day. Certainly, even though, well, we'll discuss fundamentals shortly, we'll basically finish minus 16 points, minus 0.25%. The top three performers being Royal Mail, G4S, Tullow Oil. The worst three performers being Capita, Aberdeen Asset Management, and Hargreaves Lansdown. Okay, so basically what's happening here. Yesterday, obviously, the day before, Tuesday, it was underpinned by by Vodafone, okay, and underpinned by Land Securities. Now today, Sainsburys came out with a obviously slightly weaker loss, which more or less was factored in. Obviously, everybody expected it, okay. Although it did paint a bleaker forecast of the supermarket or the retail sector altogether. Okay, then we had Burberry. Burberry obviously didn't do well. Overall, the results were okay, but obviously the market didn't interpret it that way and sold it off quite hard later on. Now, that's basically what the earnings story was out of the FTSE 100, really, in essence. And I mean, just a read of Market Wire will basically give you that. So, retailers throughout the session, Sainsbury's obviously down. Tesco down, banks dropped as well. Obviously, that was an important news story. FCA basically slapped a 1.1 billion penalty on five banks for forex rigging. I mean, these guys are all basically they're all up to it, aren't they? So many skeletons in the closet, it's unbelievable. Okay, so SSE dipped 2.75. Tullow Oil as well. So basically that's what's happening with regards to the fundamentals. Okay, so you had a fine in the morning. Sainsbury's weaker than expected, so obviously the FTSE gap lower by 15-20 points. I then went subsequently long, and given the fact that obviously US markets were quite bullish, Shanghai very strong overnight, and but the FTSE had other ideas. Although I was still kept in my trade because my stop loss was 6585. Which was almost hit because the low we put in today was 6589. So thankfully I just about survived, although I did get stopped out on my Euro stocks and my CAC longs today, and I just about survived on my DAX longs. So overall net today minus 60 on CAC and Euro stocks, and the FTSE and DAX trades certainly remain active and looking for a move higher, given the fact that US markets have finished quite stellar. I mean, the Nasdaq making a new high again, or well, basically finishing at the high, and the Dow finishing at the high, and the S&P finishing at the high as well. And USD JPY, Euro JPY certainly retracing and trying to move higher, given the fact that the sales tax is potentially going to be delayed. Now, I'm still hearing reports with regards to the Japanese government obviously delaying or basically calling snap elections, given the fact that the popularity of Mr. Abe is certainly waning. Okay, so there's certainly some sort of political maneuvering going on there, but overall it basically means weak yen. Okay, given the fact that it's going to be a sales tax hike, and given the QE, 80 trillion QE, and obviously the pension fund increasing its holdings, overall net it's certainly looking positive for the Nikkei. Okay, and obviously Hong Kong and Shanghai certainly seem to be benefiting and gaining from the interconnect. Okay, so that's basically what's happening. Aussie and Kiwi certainly very strong, so therefore from my perspective I want to remain bullish on the FTSE, given the fact that commodities are obviously basing here from my perspective, and we're looking to certainly propel higher. Now, I am swing long on the FTSE today from the 600 level, and I'm looking for 6750 on my swing long trades. Now, I do offer my swing trades for free, so those that are interested, just email me and I'll add you to the swing trading list for free for my long-term trades. Okay, so now I've explained the fundamentals. The only other fundamental aspect left really is inflation. Okay, the inflation targets were obviously downgraded, interest rates were pushed back, therefore Mr. Carney remains dovish. If he remains dovish, that's positive for the FTSE. And obviously, as we all know, whenever interest rates get pushed back, stock market loves that. It's interpret it as Kool-Aid, and that's basically what they prefer. So you can certainly see here an article from Reuters basically summarizes it in one sentence really. Bank of England sees inflation below 1%, slower rate rise. Okay, and that's all you need to know. That's obviously bullish for equity markets, so therefore I remain bullish on the FTSE 100, given the fact that the Aussie and Kiwi are very doing spectacular. I'll just bring up a chart of the Aussie and Kiwi and I'll show you. Caramba. Let's have a look. Okay, so gold price, certainly like I've already explained, it's an inverted head and shoulders formation, so therefore that's bullish for commodities. Oil price, that was a gold price, sorry. Oil price certainly making a base again, that's bullish for commodities, bullish for FTSE 100. Now the Aussie and Kiwi have already led the way, so you've got an inverted head and shoulders which is already in play, and it's looking to close a gap above. Okay, so the Aussie and Kiwi are already telling you that the FTSE 100 wants to go higher, so always watch your Kiwi and Aussie. Again, inverted head and shoulders triggered, what a move higher. Okay, so your commodities will follow, and currencies always are more liquid, so therefore tend to put the move in first. Okay, right, so that's basically covering fundamentals, obviously giving you some intermarket analysis with regards to commodities and commodity currencies. Now let's have a look at the actual index itself. Okay, so the FTSE 100, let's bring up the daily chart, always explore that. Okay, so daily chart, inverted head and shoulders, the target remains 6770. We are going to be touching given the fact that all global markets have potentially retested the previous highs and broken the 75%, expect the FTSE 100 to do the same, and given the fact that we're into the 200 MA here, which is 6690, and the next level being 6725. So watch out for those levels, and obviously above that then is 6850, etc, etc. So my bias certainly remains bullish here, and the inverted head and shoulders certainly seems to be in full swing. Okay, now let's have a look at the next index, which is going to be the FTSE All Share. FTSE All Share Index is bringing on a daily chart. Really, it's yes, we've had some slight pullbacks, but we are looking to continue to make a move higher there. Okay, especially given the fact that sterling obviously is now 1.5775. That's going to help exports, and the FTSE All Share will certainly be benefiting and gaining from that. Same thing with regards to the FTSE 250. So FTSE 350 inverted head and shoulders is already in play. As you can see here, you've got the excuse me, there's your left shoulder, head, right shoulder, off we go to the races. So we've taken out this resistance level, just a matter of time, and obviously we're looking to potentially test the 200 if not higher. Okay, now the FTSE 250, again, like I said, given the fact that sterling's at 1.5775, and given the fact that we've got a dovish outlook with regards to interest rates and inflation, then the next level here is going to be 200 MA. We'll see when we get to this key trend line, see exactly what happens. From my perspective, given the fact that sterling is lower, then don't be surprised if the FTSE 250 hits or breaks the 16,000 level. Okay, so watch out for that. So certainly bullish patterns overall on the FTSE 100. Now let's have a look at the smaller time frame. Smaller time frame, as you can see, this key level here, horizontal 6590, solid support. Okay, expect that to hold. Okay, we have I mean, you can connect this and this together. Watch out for this key resistance line here. You've obviously broken out this veg, but then we did come back and obviously retest it, so ignore that for now. Yes, you do have an unfilled gap at 6560, and yes, one can argue that you do have a potential HNS brewing here. Left shoulder, small one, head, obviously right shoulder, then obviously down we go. One could certainly argue that, but you would need some real bearish news. I mean, we did have growth forecasts in Germany cut today. Even though the euro is lower, you should technically be supporting European markets, but that's not the case. We've had some concerns with regards to Russia and Ukraine. I think that's certainly causing some ripple or side effects, and I think there have been some anti-QE comments out from Mr. Weidman again. So, but having said that, really, I mean, given the fact that if there were anti-QE comments, then we should certainly see the euro above the 1.25 handle, but it's not. It's currently around the 1.24 handle, which is obviously stimulus, or is acting as a stimulant for Europe. So it's a real conundrum with regards to European markets, and especially given the fact that the US markets still are into their highs and holding their highs, and certainly looking to push above the highs. Then certainly there's no excuse really for the German DAX or European markets or even UK markets to be lagging. So they certainly need to be playing catch up, from my perspective, especially after Mr. Draghi's dovish. So that's my perspective anyway. I maintain a bullish stance, and I'm looking for higher prices, hence the reason why I'm swing long. and also my day trades as well. So that's your 10-minute chart. Watch out for the 6590. That will be solid support and should certainly hold. Now from a 60-minute chart perspective, yes, we have an inverted head and shoulders target at 6670, so we certainly need to potentially propel higher. But from my perspective here, one can argue, yes, you've certainly broken through, broken this rising contracting wedge pattern. One can argue that you have this H&S formation here, so it's your left shoulder, like I explained in the 10-minute chart, head, and then obviously a failed bull flag, and down we go, given the fact that we've got a unfilled gap below. So certainly you can certainly interpret price action here in two ways, but given the fact that the US markets are at highs, given the fact that Mr. Carney is dovish, fundamentals are basically explaining to you that it wants to go higher. That's my understanding. So fundamentals always trump technicals. Obviously, if the yen starts to rally overnight, or the dollar certainly starts to move higher, or there's some geopolitical obviously event, then it's a totally different story. But if everything remains status quo, and we still have talk with regards to the Japanese election being called, and the yen obviously certainly getting debauched, then or yen debauchery continuing, then yes, the bullish side is certainly in the equation, and we are looking to potentially move higher. So that's basically my interpretation of events. Okay, now we can look at the individual sectors if you want, just very quickly. You can look at the mobile. Certain telecom certainly remains bullish. Hotels, we have had a slight pullback. We are into support. The mining sector certainly did push higher today, potentially looking higher again, given the fact that the inverted head and shoulders formation is on gold. So that itself is a warning sign for the bears. Watch out. There's certainly a short squeeze coming. Okay. Now let's just see if I can have a look at any other sectors here. Okay, building and construction are into support. Right, let's have a look at the rest. Okay, so you got retail. Retail certainly is under the Kosh H&S formation there. Oil price certainly seems to be stabilizing there. Banking sector, yes, as we all know, but has held a 200 MA. The pharmaceutical sector, yes, we've had a pullback, but it's certainly back into support. So conclusion, overall, bias remains bullish, and I'm looking for higher prices. That's basically my interpretation. And really the sole driving force from my perspective is Mr. Carney. As long as he remains dovish, stock market's going higher. Okay folks, so risk on, risk off, wax on, wax off. Goodbye now.